Hello and welcome to Pro Trader Strategies Market Commentary for Monday, March the 2nd. I'm Eric Wilkinson and you very well may recognize me as the Wolfman from mainstream media, where I've talked about everything from economic to geopolitical and market analysis. Well, I do that same stuff in these daily market commentaries where I talk about the economic data, the geopolitical environment, how that's going to overall impact the overall markets in my eyes. And then we layer on top of that now some option strategies that I have rules for implementing in and around those different assumptions. For instance, if we have high implied volatility, what strategy should we be implementing in and around a bearish assumption for high volatility around that underlying? So keep your eyes open for the webinars. That's where I go into the major details of that. Yes, I do talk about those details, those rules that I use for implementing options in and around an portfolio, but I don't go into that finite detail that I do in these webinars. So make sure you check those out as well. Also, remember, past performance of any trading system or methodology is not necessarily indicative of future results. All right, with that out of the way, let's get it on with the economic data and see what's going on with the overall markets. Across the pond, we got some manufacturing PMI out of Spain. Came in at 50.4. That was expected to be 48.9. Remember, anything with these PMI numbers above 50 is expansion. Anything below 50 is contraction. Now with this Spanish PMI number, that is the first reading we've seen since July of 2019. That is above 50. So we're starting to see these PMI numbers trending into a positive or above 50. Keep in mind, most of these economic data points were before the coronavirus really started hitting the mainstream media outlets and everybody really talking about it. So, we got to take it for what it is worth. Italian manufacturing PMI better than expected, although below 50, coming in at 48.7, expected to be 48. French final manufacturing coming in at 49.8, just slightly below 50, but above the reading that was expected at 49.7. German manufacturing coming in at 48, expected to be 47.8. So those numbers all beating what was expected. The rest of the European region coming in at 49.2, slightly better than the 49.1. What was it? Excuse me, Great Britain coming in at 51.7, expected to be 51.9, so a little bit lower than expected, but good to see that number is above 50. That's the first reading we've seen above 50 since I have to go back into the Wayback Machine, probably June of 2019. All right, then we go on to here in the United States. We got our own ISM, which is the Institute for Supply Management. Manufacturing PMI, so that's Purchasing Managers Index. Anything above 50 is expansion in the economy, and it came in at 50.1, expected to be 50.5, so slightly lower than expected there, and no revision to last month's number, which was 50.9, and so two positive readings in a row, which is good because before that they were all below 50 going back to September of 2019. So our manufacturing starting to move a little bit higher. And then the manufacturing prices paid coming in at 45.9, expected to be 51.2. I don't think that's necessarily a bad thing, you guys. No, it's not showing inflation, but I would like to see lower prices, especially in the manufacturing sector. Probably most of that due to this crude oil and the inputs coming into that manufacturing process starting to lower a little bit. That means that they're not going to pass it on to the consumer. Yeah, well, we would like to see some higher prices. That shows demand, but I think we're seeing some pretty good demand here. And if we continue to see lower prices across the board, well, that allows us to spend that money in different places, as well as if they're not passing on higher prices to us. We can create more velocity of money and maybe get out of this coronavirus unscathed, which I think is a little bit overdone to the upside, or a little bit overblown, to be quite honest. All right, construction spending coming in at 1.8, expected to be a 0.6, so knocking it out of the park there. Last month's number was in negative territory. It's been a bit of a mixed bag, but that's one of the best readings we've seen since basically June of 2018. So nice beat there on construction spending. That is a good sign to see alongside with that manufacturing number that we saw coming in above 50. So pretty good economic data across the board. You know, the markets are moving higher today, despite the fact that there was a couple more coronaviruses detected here in the United States. I think there was even one death here. So the markets really kind of moving a little bit higher. I think that we talked about this yesterday. Felt a bit like capitulation going on because gold was really coming off despite the fact that we were seeing another huge down day in the equities. Well, late in the day, we saw that money get put to work as the markets started rallying and finished near their highs of the overall session. So today, with some of those coronaviruses coming out, we saw the markets really slam down overnight. I mean, almost 1,000-point swing there in the Dow Jones Industrial Average. So seeing a bit of a comeback, though, at this point. We've got crude oil moving higher. I talked about this down there at 43, which we even tested again this morning, overnight. We're seeing some pushback. As you guys, the frackers cannot make money at these lower levels, so they're going to start pulling back on production, which would, you know, theoretically start limiting supply. And if you have a lack of supply and even a constant demand, that should drive prices higher as we go back to Econ 101 there. All right, we've got gold moving a little bit higher by about 30 points, but yes, what was a Friday? I mean, a massive sell-off, getting below that 1,600 psychological level, got back down into the value area where 70% of the time and volume has been spent. You know, our point of control is about $100 a troy ounce lower than where we currently are. Yeah, I do think that we're going to see some of these gold bugs still kind of hold up on this market here a little bit as they are using that as a safe haven. Remember, all of our economic data that we've been seeing hasn't taken into account the coronavirus. So yes, we are seeing good economic data, non-recessionary for the most part across the board, and at least here in the United States. So good economic data, but there is this forward thinking with the coronavirus that could cause slowdowns as companies are starting to cut back on travel and things of that nature. People don't seem to be having a problem going out. We'll talk about that here in a little bit. But we've got the bonds up almost a point on the day, making a new all-time historical high, again with lower yields as well. So if you are thinking about refinancing, now is the time to really do that. VIX is in negative territory despite the fact that it looks like it's a green candle there. We are seeing this pullback as we tested 50 on Friday. We're starting to see some of that pullback a little bit now as the equities are trying to make a move higher. As you can see with the Dow Jones Industrial Average up about 350 points right there. They were up just slightly over 400 points earlier today. One thing to note, we've got this doji down here. You get that gap down and a nice hangman doji. That is especially at a low move like we're seeing here with that real sell-off. Feels like it was a capitulation moment there and people putting money to work. We're starting to move a little bit higher. We're at the point of control there. As you can see right here, we are at a point of control where the most volume has been spent. That's where people are finding opportunity. That's where people are finding value and taking advantage of that at these points. All right, the NASDAQ up over 100 and almost 120 points. Again, making a move higher. Confirmation of a bottom here. You know, the value area, yes, is much lower than this still, but I think that price is definitely going to start being accepted up at these upper levels here as we go further down the road. That being said, a lot of this good economic data should give us a little bit more of a lift there. E-mini S&P is up 36 points. You can see making it look like more of a confirmation. Wild rides overnight in the equities. You can see on Friday we did finish near or very close to the highs of the overall session, creating that hangman doji type scenario. And today, coming into the session, trying to make moves higher. Really not a whole lot of correction going on overnight, but the market's really feeling pretty strong, at least at this point. The only thing I want to do is talk about Costco. Costco was bonkers over the weekend. People buying everything, canned goods and all kinds of stuff, just getting ahead of this possible pandemic. So I was trying to get in there and sell some puts in Costco. I am very close to maximum allocation in my portfolio, so don't have a whole lot of extra dry powder to throw out there, but I was absolutely going to jump on Costco after seeing the lines there more than normal. So other than that, I was looking to put that on, but it is about $1 away from where I was trying to get in. I tried to get in when it was up only $10 on the day, and it was just almost an unabated move to the upside. As for the portfolio, it's looking pretty good, you know, aside from Delta Airlines, and even Disney is trying to make some moves. Remember, I sold some extra puts in Disney. Those are helping me out today, despite the fact that Disney is down 40 cents on the day, but it was down much further. It's even trying to make that climb back. Other than that, portfolio is starting to come back from that big sell-off there. I am short a lot of puts in the very near duration in those March. There's only 18 days left to expiration. So even though my puts are out of the money at this point and we're making these moves, volatility explosion is really hurting that position more so than anything else at this point. I think I've got good strike locations on most of my product or most of my underlying. So I'm pretty happy with the portfolio right now. As long as there's not a big massive down move, this should end up working out pretty okay. I don't want to get ahead of myself there and jinx it, but looking at least a lot more positive than we've been in the past few days. That's all I've got for you guys. Check out my webinar on implementation, or the webinar course on implementation of options into our portfolio. It is really building out a full portfolio like I'm doing right now. You know, I'm selling some puts right now in this high implied volatility. It gives me great strike location, much further away than we would normally be able to achieve. And if I get clipped on those, I've got good strike location on buying those underlyings. You know, I've picked great spots on that, and I show you how to do that in these webinars. We go in there. What do you need for implied volatility? Where is our strike location? All of those things. Why we even pick strike locations, and why I think the ones that I've got are better than what you'll find on TV or just by Googling. All right, so check those out. That's all I got for you, other than if you can't take that, take it easy.